Okay, all right. Thanks a lot for that, gentlemen. Well, there's a big boost coming in for cement. GST on cement has been reduced to around 18% from around 28%. To help us out with what's the impact on the sector as well as on the company, Mr. Sandeep joins us, the MD and CEO at Birla Corp. Hi, sir. Good morning. Thanks a lot for joining in. Well, GST rationalization has come about. The entire industry was talking about this for the last many years. Firstly, how much do prices come down by? Because all of it would likely be passed on. And what kind of impact can it have on demand?
See, first of all, prices will come down approximately, as they're saying, 10 rupees. So it would come down in that region, I would guess, 10 or so. That's how broadly, once it kicks in, that's after 22nd. But before that, one will have to see that you have to actually segregate between the short term and the long term. First of all, the next 2 weeks, I think it's going to be a slump. That's because, when the corrections are coming from 20th, trade down stocks, when you're seeing the prices going down. So September is not going to be such a good month for the industry, is my reckoning, both in terms of volumes as well as in terms of pricing. And thereafter, things will stabilize over there. And that will be, as you are saying, you'll probably see a correction about 10 to 15 rupees, depending on the region, depending on how the balance is.
Okay, got it. So, the broader view is that September could be a little bit softish, but because of this rationalization, it could spur demand. Earlier, you were talking about 7 to 8%, demand growth. Do you think that's possible right now, taking into account, that there's going to be some softness in the near term? And do you want to up that estimate?
See, first of all, it's too early to really make an prediction on the overall demand scenario. But I see that demand will get triggered not just by the correction of the cement duty. Where the monies will go into the hand of people is the all-across reduction. So be it in consumer goods, be it in other building materials. A lot of other building materials, as you know, they have also, the duties have come down. So that will give more money in the hands of the home builders to go in for, and it should give a boost to the IHB segment. See, infrastructure demand would be by and large inelastic. I'm talking about the large infrastructure. Where you're going to see the difference is a lot of this will, trigger the rural demand. It'll trigger, the development, expenditure in Pradhan Mantri Awas Yojana and those sort of projects that will take out. There you will see a positive impact. But the bulk of the impact will come, I think, from the retail sector. And that is where people like us who have a high volume of blended cement, high volume of what we call the trade sales, as opposed to non-trade, which is the industrial, the big infrastructure, they are to benefit a lot.
All right. So, a couple of aspects here. The street believes that maybe there could be some margin, gain as well, because maybe all of it or most of the pricing will be passed on, but operating leverage will help and focus on premium sales will help. And as you said, I think trade sales for you is around 70% of the mix. Is that correct? And out of trade sales, close to around 55-60% is premium. So do you think people will go in for higher amount of premium now, premium products?
See, premium, when you talk of, there are two ways to look at it. If you're looking at it from your market standpoint, you have to see the people who are operating at the higher price band. And there are people who are operating primarily on the higher price band. So if they have a strong brand pull, they have a pan-India presence, you will see some of the benefits coming in there. And for smaller players who have a mix of premium and what you call popular or the value segment, obviously they could see an uptrend on the premium, which has been generally, as you will see, a trend not only in cement, but in a whole host of industries. There is a premiumization going on. And if things become more affordable, you'll find especially the individual consumers who are now more aspirational, they are going to opt for the branded and the quality products.
Okay, all right. So there'll be some kind of downtick in terms of pricing. Demand for the year, you're working with high single digit, right? 7 to 8% cement demand growth.
We'll really get to see the demand post the festive season.
Okay.
Because there are various factors, it'll be too early to talk of. The
Yeah.
monsoons has an impact.
Yeah.
Some say the monsoon, the heavy rains could dampen a bit of the
Okay.
agricultural demand, etc. So I would not
Yeah.
right now rush to predict a demand upsurge, but it'll sort of balance out between everything. As you said, if there is a price drop, there'll be certain benefits for price drop to people. It's not all because the coal. That's a big ticket, I think.
Yeah. Just want to clear, sir, two more points. One is on SGST, because states effectively, now they'll get lower amount of money via the GST route. So will it hit incentives for a company like yours? Do you see it as a risk? Point number one. And the second point, sir, is on coal. Coal, the GST has been up to around 18%, but they're done away with cess. So effectively, that doesn't, increase cost for you. Could that be positive on the margin?
Coal would give people who are highly dependent on domestic coal, I think it'll give them a benefit because of the cess removal. That's the big thing. Because the other GST is going to get offset, that's an input credit, which you will get by and large. So that increase is not going to hit the bottom line straight away, but that cess reduction, especially for people or regions where people are dependent on domestic coal,
yes,
I think that'll be a positive.
That'll be positive, but the state GST, could it be a risk?
State GST is slightly more complex. There are two parts to it. Those are capital, capex-based incentive. You may have a short-term thing, but the quantum of GST is not going to get affected as GST. And also, if there is a cap, most of the states have a cap, annual cap. So if people are already meeting that cap, it is not going to hit their absolute numbers in terms of number. In terms of the market, I think it should be healthy for the market because it'll create a more level playing field. There are some players who were heavily dependent on incentive, and they will now have to be more prudent in how their pricing goes.
Got that. Thank you very much, sir. Thank you for joining us and running us through first thoughts as far as the GST cut is concerned. Let's get back to the market. 2 minutes to go for the market open. We're going to just revisit Mahindra and Eicher. Sur is putting the spotlight on these two names. Sur, over to you.
So two surprising factors in the auto pack from the GST Council meeting. One on the positive side is for Mahindra and Mahindra because now SUV GST has moved higher to 40%, but effective tax rate would be lower than the earlier tax rate because earlier, for example, on XUV 700, 28% plus 22% cess, so total effective tax rate used to be around 50%, which would be now at 40%. And now management is saying that 60% of companies' total volumes, including CVs, will be in 18% slab, and 40% of SUV portfolio will be in 18%, and rest will be in 40%. So overall, it's positive for M&M. Second, Eicher Motor. So almost 89% of its total volumes will be in 18% category. So that's positive. But one surprising negative factor is almost 10% of total volumes will fall into the bracket of 40%. So effective tax rate will increase from 31% to 40%. So that would be minor negative for Eicher.
All right. We got, things opening up. Eicher is up 5%, as you can see. If we have time, let's just quickly put the stocks up. I don't think we'll have enough time. But
M&M 7%.
Yeah. So, and by the way, the Nifty Auto Index, I just looked, from 14th of August close, 15th was the Prime Minister's announcement that we'll go big on GST. It's up 7%. But even after that, you got big opening gains coming through. 24,900 on the Nifty, 81,250 on the Sensex. And these are the first rates which are coming through. 190 points, almost 200, by the way. 24,900 is coming through on the Nifty at this point in time. The Nifty Bank is up about 0.5%, 54,318. And the mid-cap index is up about 1%. The small-cap index will come up on your screen, which should be higher as well. So across the board, of course, it's green. And I think all 50 Nifty stocks should be higher. Maybe the insurance names, but we'll see. The heat map should tell us that. We'll dive into individual stocks, sectors, etc. Right after that. The reinsurers, etc. are opening higher. Heat map on your screen. What do we have? Okay, not all. IT services and a bunch of others are lower, but otherwise, it's all up. And Mahindra, I think, is leading the way once again. 160 points on the Nifty. Surabhi.
Absolutely. And M&M is looking really, really smart with a gain of almost 6%. But I must point out that even insurance, where there's the worry, right now, all insurance stocks have opened positive, including Niva Bupa. Niva Bupa is surging 7%, might I add. The company just told us that overall it's going to be very positive. They will be passing it on to the customers, at least as of now. And they expect perhaps higher value policies and a bigger sum assured to get sold, because people have more money to just buy better and bigger policies. And that seems to be working in favor of the stocks. Anyway, coming back to the Nifty tally, apart from the individual beneficiaries like a Nestle, like a Lever, like an ITC or a Hero Moto, look at Bajaj Finance. The market is choosing to play this through some of the diversified financials. And we know Bajaj Finance obviously has a huge consumer lending franchise. And that stock is the next biggest beneficiary after Mahindra and Mahindra. Then come in some of the big cement names like Ultratech Cement. Nigel's been telling us that overall it's a big positive as well, with the cement moving to 18%. Eicher Motors, Nestle, Lever, ITC, Trent. Incremental gains between 1 and 2% on all of these stocks. And even the insurers within the Nifty, SBI Life is positive, HDFC Life is up 0.5%. So there is no big slam dunk on insurance at all. Perhaps the market had enough time to prepare for this. On the flip side, actually not too much. Reliance is a bit of a drag. It's a bit of a spoil sport this morning, down about 0.5%. Eternal is cooling off. And some of the metal names after yesterday's scintillating performance. Today, the metal stocks, Hindalco, Tata Steel, etc., just slightly lower. From a 200-point pop, now we're looking at a 160-point move on the Nifty.
Well, some of those hotels as well are doing well. Lemon Tree, that's moving on high volumes, up 3.5%. As Deepan said, Bajaj Finance, well, that could be the ultimate beneficiary, because all the items that you're buying, by taking some credit, well, their GST has come down. So that could be an indirect play. And that's why that stock is up close to around 4%. Solid move on that particular name. Dabur is up close to around 4.5%. So big move out there. Vishal Mega Mart is another stock that's moving on very, very large volume. So that one's up and about. The ones that are under pressure, you have Delta, because the casino entry GST rate has been fixed at around 40%. And Varun Beverages as well. That one is down close to around 2.5% or thereabouts. Ashok Leyland actually is down close to around 2%. That's one of the notable names from the auto pack that's actually underperforming in today's trading session. Pull up Newland Laboratories as well. There was an IC note that had come in from Nuvama with a target price of around 17,700, I think so. So maybe we could get that stock up for the time being. It's up only around 0.5% or thereabouts. But otherwise, autos, consumption themes doing well. The market's holding at around 24,850. You'll want it to hold on to these gains. The markets are net short. It could result in a bigger up move, but you need to hold on to these gains.
Well, that's the thing, right? 180 now, 150 actually. So just about getting things going this morning. We'll get to individual stocks and talk more about this, but let's welcome in Venugopal Gare as well. He's India Head of Research at Bernstein. Venu, good morning. Great to have you with us here. Thanks very much for joining us. Venu, the simple question is, how much is in the price and how much is not across sectors, across mostly consumption sectors? Rates are either flat or they are lower across the board. How do you think about this question? How much will this do to increased affordability as a fillip to consumption? Venu, go on.
Yeah, thanks, Prashant. Everything in life is relative to what it was earlier. So that's a broader principle I use. So if you were to look at consumption in general across the board from a broad-based standpoint, from an economic data points perspective, things have not been that great in the last couple of years, while we've essentially seen the other parts of the economy, including industrials, capital expenditure, essentially being the ones which have led the last few years. Now, what is essentially happening is broadly a forced policy push towards consumption. And this is not the first point at which this is being pushed. We've been sort of seeing the change in theme from the fag end of last year with the direct tax cuts announced with effect from April, a $15 billion sort of a positive cash flow to the middle class, which is a recurring annual sort of a cash flow. And on top of that, you have this GST impact, which purely from product standpoint, when we look at the impact is more than $20 billion. I'm just ignoring anything on the services side, which again is a pretty large number. Remember, that doesn't stop at this. We also have pay commission impact, which is a pretty large number again next year. Lower inflation this year in the second half of the year, lower rates, higher liquidity in the system. All of it broadly needs to be factored in when it comes to the potential positivity when it comes to consumption relative to every other sector. So that's the way I would look at it. At the margin, incrementally, the sector would outperform. Quantum-wise, of course, remember that the limitations, if at all, would be the fact that economy in general hasn't been that great. And plus you have the export impact, which might sort of impact a bit of jobs here and there. We need to negate that as well. So these are the counterbalancing sort of aspects to the extent to which you will see a push.
By the way, I just want to point out that the market today, today's level of the Nifty is a couple of notches lower than where the market closed on the 18th of August. And why do I talk about 18th of August? Because that's when the market reacted to the announcement, Prime Minister's announcement, which was made on the 15th of August. The market that day closed at 24,876, exact number on the Nifty, 876. Today we're at 852. And Venu, that's my question. You know, so much positivity has been thrown at the market. This big, I mean, government spent a lakh crore, right? That's the revenue loss from these GST cuts, and there's hope of a good festive season, good monsoons. But why is the market in such a funk? It's simply sort of refusing to see or get too excited about the positives. So what do you think this is? Is it just because of the extent of selling? Or, you know, what's happening here? Why not the kind of, excitement that you would anticipate after a move as big as this one?
You know, the way I would look at it is that the economy has not been very strong for almost a year. Ignore the base effect aberrations and catch-ups, which led to a recovery in the March and June quarters. But on a broad basis, domestic economy has been weak. The second main part is, of course, you're still seeing some concerns on the geopolitical side of things, the overtures India is trying to do with China, US-India relationship spoiling. We've essentially moved to a 50% tariff. After the GST announcement, 2 weeks later, we had moved into that higher tariff rate. So putting all this into perspective, remember that a lot of what is essentially happening on the policy front are offsets to economic weakness. And of course, what we are seeing today is slightly larger than an offset, but the reality is it's only neutralizing some bit of the negative impacts. The other thing, remember, is purely from a flow perspective, there are two main things to note. One is we've not essentially seen EM money or FII money essentially too excited about India. Part of that is because there were great opportunities elsewhere. And more importantly, economically, things were a bit more weaker, along with valuations being higher. So that is something which needs to reverse in the second half of this year for you to see markets to go to higher levels. And we do believe later in the year it would, because once all these moves essentially lead to an improvement in the economy is when you essentially see FII money flow in. And whatever domestic money is flowing in, you're also seeing the IPO pipeline as well accelerate. So there's a lot of selling as well happening in both the primary and secondary markets, which is sort of digesting that bit of a flow. So it's a combination of all that. I wouldn't really worry too much about it 6 months from now, but don't expect any immediate gains just because of this move.
Hi, Venu. Good to see you, Venu. No, but it's encouraging to see at least the center taking note of the slowdown and acting on it. And monetary policy as well has been pro-growth. So I think both those two at least, they acknowledge the problem and trying to do something about it. That said, the two big beneficiaries, going by the reactions on the stocks, going by what most brokerages are saying as well, autos as well as FMCG. Now, FMCG actually, the staples part of it has underperformed. How do you approach that pack? What do you like from FMCG, the discretionary spend, or do you think staples as well, you'll give it a look? And from autos, which category do you like?
Okay, so, on an overarching basis, when we headed into this year, we had a change of view in terms of how we positioned our sectors. So this was the first ever year where we had consumption overweight on a broader basis relative to industrials. Now, within consumption, FMCG as a space, I had upgraded about, I would probably say 1.5 to 2 months back. And that is a sector which is essentially underperformed for a fair bit of time because of volume growth concerns. This is a space, I guess, given what has happened to GST changes today, is a positive surprise, honestly. I didn't really expect some of those categories to move to 5% rate. Especially when things like shampoo, soaps, I thought probably it'll be still at 18. So it is a positive surprise. So FMCG pack in general, I guess, still has some legs because it's not really done well in the last couple of years. Within the small value discretionary, I think we shouldn't miss out on that fact, which is durables and other areas, ideally should also see some degree of lift in terms of demand. Remember that just because a consumer is saving, let's assume the $20 billion number based on whatever he was purchasing earlier, that money doesn't need to go into the same sector. That could perhaps be used for buying any other product, or maybe even invest or repay debt, whatever. I mean, from a quantum standpoint, one can discuss. So that is a very important factor as well when it comes to taking an overarching view on consumption rather than a particular category. Yeah. Coming to autos, very clearly, it's a benefit across the board for ICE players versus EV, because the gap between EV and ICE tax rates are narrowing. And within ICE, we've been in general positive on small cars, which has essentially seen a run. We're also positive on the tractor sort of slash SUV space. So these are relatively more preferred rather than an entry level motorcycle, because we do believe that wherever penetrations are lower, there'll be a larger propensity to see a broader volume impact, as against sectors where penetrations are already high. You should ideally see a lower impact in terms of volumes. So that's a broad way I would put it.
I just want to quickly highlight that if you look at the auto space, right, it is Mahindra at one level, everything else is far below. Eicher is also just up about 2.5%. Mahindra continues with its 7% pop, not very much else really in a big way, which is sort of starting to show through.
And on auto, yeah, the actual beneficiaries, or the ones that were supposed to be big beneficiaries like Maruti or Hyundai, the stocks have also not moved too much. Those stocks are up between 1.5%.
So it's a sad thing, but as someone said, and I think it makes sense, right? That like at the lower end of the EMI difference, for example, a Alto or the entry level kind of cars. The EMI difference is so small, it's actually a few hundred rupees on a typical auto loan. So if you could not afford a EMI, for the entry level car before, would a few $100 make a difference to push demand?
Yeah.
Right? That's the, I think it's a relevant question to ask. Hopefully it does, but I don't know. Yeah.
No, absolutely. And in fact, I was going to ask Venu exactly about this, about financials and the way we need to think about it. Because, of course, Bajaj Finance is a clear beneficiary straight out. But overall, on financials, would you expect...
I think Venu wants to say... Venu, you want to add something? I can sense that you want to come in. Go on, Venu.
I just loved your comment on the quantum of EMI impact. If you were to extrapolate this to every product category, then there's going to be zero impact on anything. So a 20 rupees soap, why should somebody buy? Because it's 2 rupees cheaper, right? So I think we need to look at it from a broader context of...
No, you're agreeing with me, or you're being sarcastic, Venu?
I'm being sarcastic with you, not to the market.
Sorry, what is that?
I'm being sarcastic on your comment rather than on the market and the benefit. I do believe you need to think of need to look at things from a very holistic overall impact perspective, right? So this $20 billion number is, I don't want to nitpick on particular categories. Honestly, 100 to 200 rupees saving is very meaningful for a particular individual who's buying a two-wheeler. Yeah. A 5 rupee saving might be quite meaningless across the board on a soap for anyone, right? So, but the saving is a saving, right? And it's going to feature somewhere in terms of some incremental volumes. That's the way I would probably present it. And also remember, Prashant, that Maruti...
No, Venu, my point, the point is you're aggregating all the savings, and that is saving in the hands. It'll go somewhere. But my only point was, can you say this segment is where it's going to see a bump up? I mean, exactly. That was my point. So for exactly entry-level cars, will demand go up significantly because you got a couple of hundred rupees in terms of EMI savings?
The price of the car
I'm not sure.
itself is down 10%, right? We have to take that on board as well. That the price itself, if it's passed on entirely, like M&M said, the price of the product does go down by 10%.
That's what I'm saying. Yeah. But calculated as EMI, it's 700-800 rupees.
Yeah.
That is my point. I'm saying, will it really move the needle for that product category? I'm not sure. Go on.
Prashant, fair point. In fact, just a couple of minutes back, I had commented this, right? Saying that a saving in a particular category does not mean you invest in a particular category.
Exactly.
You would probably invest in saving somewhere else, in any other category.
Yeah. That I agree completely. Yes. No,
That's
I
the
think
big
we're
Also remember that stock prices have moved very differently. Maruti had moved ahead of this particular announcement quite
That's true.
materially. It was below 12,000 rupees just about a month back.
That is
Right?
true. That
So
is true.
think of that fatigue as well, right? And
No, no,
M&M had not
absolutely.
moved much 2 weeks into that previous GST announcement after the Independence Day. So maybe that is the other aspect to look at it. Plus this incremental thing is tractors also have happened.
And
So that is also playing more as a positive sort of a spirit.
no, no, absolutely. And everything doesn't need to happen on day one. When you take that point, I mean, the manufacturers themselves have told us, right? This will eventually play out. They'll ramp up their production and let's see what and the debate that you and Prashant are having, I think we'll have exact clear answers within 2-3 months on whether the customer behavior starts changing because the headline number of that particular vehicle itself is down by 10%. But I just want to get back to the point on financials. Whether we should look at beyond something like a Bajaj Finance, whether we should look at banks differently. Do you expect, a leg up in financing to show up? And if yes, across what kind of lenders?
Yeah, I mean, honestly, the financial sector is in a situation where credit growth has been fairly weak, in fact, deteriorated all through the beginning of this year. As you see the second half of the year, there are clear positive signs of why credit growth should improve. We're essentially seeing a lot of liquidity come in the system. And more importantly, I think the regulatory system is more or less keen on pushing up consumption leverage back again a bit at least, or leverage in the economy a bit more, right? So these are all positive signs. You want to play it through a bank, you want to play it through a pure play durable lender, or you want to play it through, let's say, even things like affordable housing companies. It's across the board. You could pick and choose where you're more comfortable from a valuation standpoint. See, I am on an overarching basis overweight in financials, apart from my consumption overweight here and there. And as you know, I'm underweight industrials in other areas. So I would be probably playing a bit of financials as well from a standpoint of leverage.
And which category? I mean, spell it out. You just named a couple of them, right? But where is it likely to show up the most? Specific niche NBFCs catering to consumer, housing, where would you really expect the impact to be?
Exactly. The consumer parts of each of these entities. Some companies would be more, NBFCs would be a bit more leveraged to that. So they'll probably benefit a bit more than an overarching large bank, which is doing a lot of other things. But then my call in financials is not purely linked to GST and consumption. It's more led with overall credit growth improving from where we were earlier. So it's tough for me to, remove myself from that broader thought process of overall credit growth and not just consumption-led credit growth.
So financials, right, where economy, the financials are lenders, they're economy-facing, and so you don't have to choose. I don't know, you can't pick stocks, but I'm saying something like Bajaj Finance, right, consumer lender. I'm assuming with exposure to multiple sectors, but on the consumption side. So it should show up in those kind of names.
Yeah, I mean, look, it's all about relative growth as well, Prashant. So if something is growing at 25, it goes to 27, does it really lead to much impact versus something growing at 8-10% credit growth going to becoming 12? I guess the impact is much more for that, right? So you can't basically take a particular stock and say the impact
I
is
must
really going to be
say,
on them.
you're being very cryptic today. We'll need to, we'll
I wanted to avoid
You're saying
giving
this and that. But anyway, we'll leave it there and we'll talk again and come back and we'll talk again. We've got lots of GST companies to talk to as well. Appreciate your time here as always, Venu. And thanks very much for joining us as always. So that's Venugopal Garre, Bernstein, with his perspective. We spoke with the top management of Mahindra & Mahindra. That by far is the biggest gainer on the Nifty. Anish Shah, Rajiv Jejurikar. Listen to what they told us. Basically, every part of the portfolio, according to the Mahindra management, will get a leg up. Listen in.
Ushers in a new era of simplification and possibly a new era of ease of doing business as well. It will have a very significant impact on consumption. And this is something that should, in some ways, create that momentum that we were looking for in the economy. A lot of the fundamentals have been in place, but I think this is a very significant move that will create that momentum and propel India to an 8 to 10% growth rate overall. So that is the reason why we feel it is a very important milestone for our economy and sets it up in the right way.
Tractors gets a big boost, 12 to 5%, which will lead to prices coming down 40 to 60%. There is limited time to capitalize the upside in the festival period. We are literally 20 days away from the festival period. We can't increase capacities or production outputs. Festival period is a 30-40 day period. So I honestly don't think we're going to get a billing wholesale